Welcome to Option for All. In this first lesson, we're going to shift how you think about trading, from simply knowing concepts to executing with precision and consistency. Many traders reach a point where they understand the mechanics, what calls and puts are, how charts move, what volatility means, but there's a gap between understanding and applying. That gap is where most traders get stuck. This course will help you cross it. Trading isn't just about knowledge, it's about structure. It's about doing the same thing, the same way, every time, even when emotions try to pull you off course. That's the foundation of professional trading. Most people start with excitement and they study indicators, follow influencers, and experiment with strategies. Eventually, they realize something important. The problem isn't lack of information, it's lack of organization. You don't need more signals, you need a system that keeps you consistent under pressure. Professional traders don't focus on prediction, they focus on control. They control their risk, their process, and their reaction. Everything else, market direction, news, other traders, is outside their hands. The moment you accept that, trading becomes far less emotional and far more logical. There are three pillars that define professional execution: process, probability, and psychology. Let's start with process. Process is your structure, your routine. Every trade follows the same sequence: scan, analyze, decide, execute, review. When you follow a process, you don't have to rely on impulse. You simply check whether the setup matches your plan. If it does, you act. If it doesn't, you wait. No guessing. Next comes probability. Beginners see every trade as win or lose. Professionals see every trade as one event inside a long series. If your strategy has a 70% probability of success, that doesn't mean the next trade will win. It means over the next 100 trades, 70 should win and 30 should lose. Your job is to make sure that when you lose small. And when you win within plan. That's how consistency forms. Here's a simple example. Imagine you sell a credit spread with a 70% chance of success. You risk 2% of your account on that setup. Even if 3 trades in a row lose, the math still favors you in the long run as long as you keep the size consistent and the process unchanged. That's professional discipline. The third pillar is psychology. This one determines how far your process and probability will take you. You can have the best plan on paper, but if fear or greed take control, the plan disappears. Fear makes you exit too early. Greed makes you stay too long. Discipline is what keeps both emotions quiet. You've probably heard the saying, you don't trade the market, you trade your beliefs about the market. That's true. If you believe trading is chaotic, you'll act chaotically. If you believe trading is structured, you'll behave with structure. Mindset is your steering wheel. So, what can you control? Your position size, your strategy choice, and your reaction speed. You can't control headlines or market direction, but you can always control those 3 things. That's where your real edge lies. Professional traders make decisions before the market forces them to. They predefine their risk, their entry, and their exit. They know what will make them stop trading for the day. That's how they stay calm while others panic. Let's go through a short scenario. It's Monday morning. The market opens with a bit of volatility. A stock you've been watching pulls back toward a support level. Instead of rushing in, you pause. You check your probability, confirm your risk, and make sure the setup fits your plan. If it checks out, you execute. If not, you move on. No emotion, no chasing. That single decision, to stay structured, is what separates professionals from impulsive traders. Avoid the 3 habits that destroy consistency: strategy hopping, revenge trading, and overanalysis. Strategy hopping happens when you abandon your plan after a few losses. Revenge trading happens when you double your size to win back what you lost. Overanalysis happens when you wait for the perfect setup that never comes. The cure for all 3 is structure. Logging every trade reinforces that structure. Write down what you saw, what you did, and how you felt. In a month, review your notes. Patterns will appear, not in the market, but in yourself. That's where real growth begins. At this stage, you don't need more information, you need refinement. Think of yourself as an engineer improving a system, not a student collecting theories. Refine your rules until they fit your style and your temperament. Confidence doesn't come from being right, it comes from knowing exactly what to do when you're wrong. That's the essence of a professional mindset. When you have a repeatable system, a loss is just a data point, not a disaster. As we move forward in this course, you'll learn how to analyze volatility intelligently, Design trades that work across different market types, manage risk like a professional fund, and measure your performance through real data, not emotion. By the end of these 6 lessons, you'll have your own structured playbook, your personal, repeatable system. Remember, professionals don't chase outcomes, they follow process. The process creates the outcome. This is option 4, All, a community built for traders who want structure, growth, and consistency. If you haven't joined yet, click the link below to become part of the Option 4 All community. You'll get access to live lessons, interactive sessions, and updated market insights every week. And be sure to follow Option 4 All on Instagram and Facebook for daily updates, community stories, and trading perspectives. Thanks for watching, and remember, trading success isn't about predicting what's next. It's about preparing, executing, and improving one trade at a time.